Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching IndianOpen. Let's go straight to the headlines. Strength in the dollar and selling in domestic equities led to the rupee posting its biggest one-day loss in over a month yesterday. Dena Bank shareholders will get 110 shares of Bank of Baroda for every 1,000 held, while Vijaya Bank shareholders will get 402 shares for every 1,000 held in the three-year merger. Reliance Jio adds over 1 crore customers in October, even as rivals Airtel, Vodafone Idea shed users, also makes headway into rural India. And fewer upgrades to new iPhones, weakness in China, and supply constraints have prompted Apple to cut its revenue guidance for the first time in 2 decades. And that's certainly weighing in, and we'll talk about that as well. It's weighing in on the US market. We'll talk about that in a moment from now. But let's just first take stock of all that happened in the US markets during their trading hours yesterday before the market shut shop. So it had a very volatile day. The US markets, S&P and Dow, very mixed. It ended marginally in the green, but an extremely choppy day of trade, I must say, for the US markets. There were concerns that came in after China's factory activity contracted for the first time in over 19 months, and that led to a bit of a pullback in the Dow futures as well. S&P at a point of time, I think, was down about 1.5% to 2%, and then recovered midway through trade. I think what was probably aiding a little bit of sentiment, if you will, was that the key Fed yield gauge indicated a rate cut, which is the first time that this gauge indicated a rate cut since 2008. If you just look up the chart as well, it'll show you how the market participants are now pricing in the possibility of a cut from the Fed, not a pause, but a cut. Now, there are two ways to look at it. I think emerging market participants would be happy. The US market participants would see this as a sign of a slowing economy. All put together, the Fed not looking as hawkish, at least the market participants seem to be believing that. However, what happened, which was more interesting in the US markets, is something that happened post-market hours. They ended flattish, or the Dow ended about 1% higher, but post-market hours, Apple came out and cut its guidance for the first time in over 2 decades. And that has gotten the stock of Apple extremely active and very volatile in post-market trades. Again, this chart will come up on your screen. It just shows you how the stock of Apple just cracked post this guidance cut came in. This would be weighing in on the world market futures. I'm sure tech stocks across the US market board are taking a hammering, but I would reckon that Dow futures, if we look at them right now, would show a downtick. And frankly, when the markets open today, won't be surprised if NASDAQ has a big tinge of red. 274 points in the red for the Dow futures as we speak. I would presume largely led by what's happening. What is largely an Apple effect. Let's wait and watch if it has some bearing on our markets in the session today or no. Speaking of our markets, by the way, there was heavy selling in autos and metals, which led the indices lower. So Nifty Auto down about 3%, metals down about 3.5%. Without exception, you had almost all of the names in the red. Heavy delivery-based selling seen in Mahindra & Mahindra for a second day on a trot. Eicher Motors was the talk of town yesterday, yes, but M&M corrected 4% yesterday after correcting 3.5% the previous day. So cumulatively, M&M2 has corrected about 8.5 or 9%. So just speaks volumes about the kind of selling that happened. And because of the selling in the equity markets and the general strength of the dollar, I think the currency, as our headline said as well, corrected quite strongly yesterday. So we closed below 70.17, and the sharpest intraday move, I think, in over a month, if I'm not wrong. So weak signs. And with crude bouncing overnight, you probably have some weakness in store for the currency as well as the bond yields in today's session as well. So do brace yourself for that. However, the markets are showing some resilience because the Asian screen has a tinge of green. Hang Seng and Shanghai trading with some green on the screen. SGX Nifty indicating an upside of about 30 odd points. So we'll start off in the green despite what's happened to crude and despite what the tech futures are showing. Let's see if we manage to hold on to these numbers, or do we succumb to a little bit of selling pressure in today's session. However, amidst all of this, there are a bunch of stocks that will react in the session today. I think, to my mind, one of the most important ones is Tata Power. They've gotten a deal extension. Bombay Suburban Electrical Supply has gotten the MERC nod to extend the 667 megawatt PPA with Tata Power till March 2024. Now, for all of you who are not quite aware of this, just quickly tell you what this means. There was an overhang on Tata Power. If this contract wouldn't have gotten extended, Tata Power has two assets essentially in Mumbai, which is power generation and power transmission and distribution. And now that the generation overhang is gone, the sum of part valuation of 12, 13, 14 rupees would mean that there could be an upside, a potential upside to Tata Power in the session today. We'll be joined by the management a bit later on and we'll talk more about this then. But expect some upsides to Tata Power in the session today. In a nutshell, that's the news on Tata Power. And then the banks, the merger ratio has been announced for BOB, Dena Bank and Vijaya Bank merger. The merger ratio, as it announced, favors the stock price of Bank of Baroda at current prices. So you'd probably expect some bit of positive reaction in BOB today. It doesn't favor the other two, which is Dena Bank and Vijaya Bank, in particular Dena Bank. So you would expect some bit of negative reaction in Dena Bank, particularly in the session today. I wouldn't be surprised if it starts off 2, 3, 4, 5% lower or maybe more as well. We won't want to guess this, but it'll start off weaker in the session today. So some upsides to BOB, definitely some upsides to Tata Power, and some downsides expected to Dena Bank and maybe even Vijaya Bank in the session today. That's the sum of stocks that could react, and there'll be more, of course. We'll talk about all of them, but let's try and tell you what's lined up on First Word today. We tell you what the shareholders of Bank of Baroda, Dena Bank and Vijaya Bank get in the three-way merger. A bit of a detail out here. The mutual fund industry is not too happy with RBI's financial stability report. Sajid Johnson to tell us why. It may not be a good third quarter for oil marketing companies. Sameet analyzes the factors. And tile makers may get back some of the shine in 2019 after a dismal 2018. Yash will join us to tell us why. Okay, firstly, I'll just dwell a little bit on the announcement yesterday. The government has announced the share swap ratio for the merger of Bank of Baroda, Vijaya Bank and Dena Bank. Shareholders of the two smaller banks will get shares of Bank of Baroda. The swap ratios have been based on the closing price of September 17th, 2018, when the merger was announced, the day the government announced the merger. Now, what does all of this mean? Quickly, some graphics will come up on your screen to tell you what it would mean for each of the shareholders. So, for Dena Bank shareholders, they will get about 110 shares for every 1,000 held. For every 1,000 shares held, they will get 110 shares of BOB. And for every 1,000 shares that shareholders of Vijaya Bank hold, they'll get about 402 shares of Vijaya Bank. Now, what does this mean? This means that the implied price, as per the swap ratios, for a Dena Bank and a Vijaya Bank are 13.3 rupees and 47.97 rupees. What does this again mean? Is that compared to the current market prices, the implied price for the merger indicates a discount of 27 rupees to the current market price of Dena Bank and 6% to the current market price of Vijaya Bank. The implied price of Dena Bank is 13 rupees. The current market price is over 17 rupees. So therefore, there's a steep discount as the valuation merger of as the valuation metrics used for Dena Bank, and therefore there could be some downside that you'll expect out here in Dena Bank. I'll talk about that in a bit. The numbers base, I mean, you can argue about the fundamentals that the gross advances to total deposits for BOB 4.448 lakh crores and total deposits of 5.18 lakh crores. Dena Bank is the weaker one, so gross advances of 0.69 lakh crores and total deposits of 1 odd lakh crores for Dena Bank, etc. The merged entity, fairly interesting numbers as well. It becomes large, and that was, well, one of the reasons. I think a lot of market participants also perceived that this was also to rescue an ailing Dena Bank, but that notwithstanding, it becomes a much larger entity. The gross NPA ratios of the merged entity change a wee bit. For BOB standalone, they were about 12.4%. For the merged entity, primarily I reckon because of Dena Bank's asset quality, the merged entity's GNPAs become about 13 odd %. But it does become a larger bank because the merged entity borrowings about 76,579 crores, which is about 15 odd % larger than the current BOB size. And the market capitalization of the merged entity, again, from a 31,000 crores that BOB currently has, moves up to about 42,000 odd crores. change in the shares, change in the book value per share, change in the price to book trailing merged entity as well. Ever so marginally it goes down because BOB's price to book trailing, by the way, it can only be trailing. We can't really guesstimate what the banks will do in such a scenario. But the trailing price to book for a BOB was 0.73. For the merged entity, naturally because of some of the weaker banks coming in, would go down to about 0.63 as well. Promoter holding would change quite materially as well. But the key is what brokerages are saying about this merger. And you know, 2 or 3 names, I'll just quickly summarize. Most are bullish, or most are saying that this is because of the ratio and otherwise net positive for BOB. So you'll probably have BOB starting off in the green. But Motilal Oswal has a very interesting take on the others. They are saying that while this swap ratio appears fair in respect to Dena Bank owing to the multiple challenges faced by the bank, they believe that Vijaya Bank shareholders have nothing to gain from this merger. So it's simple, isn't it? For Dena Bank, the swap ratio is a negative and therefore it will go down. Because brokerages believe that Vijaya Bank has nothing to gain from this merger, in all probability it will go down as well. Just keep in mind one last thing before I end this piece. Since September 2018, September 17, 2018, the stock price of Bank of Baroda has corrected 12%. The stock price of Dena Bank has gained about 14%. Vijaya Bank too has come down. So the point being that BOB might still gain a little bit. The one that is likely to lose the most is Dena Bank, because on the presumption that the swap ratio will be favorable for that stock, Dena Bank has moved up quite considerably, and now there might be time for the stock to come down. So keep in mind these stocks, they'll be important in the session today. That's the three-way merger and one of the most important pieces of news today. The other one, and the second piece on First Word today, is something that the Reserve Bank of India has done, and that has voiced its concerns surrounding investments made by investors in the liquid mutual funds. The regulator, in the wake of the 8,500 crore exposure that such funds have to its ILFS group, said in its financial stability report that the entire liquidity risk was passed on to the investors. This has not gone down well with the mutual fund industry, naturally so, which insists that the business model warrants such a pass-through. Sajid Mangat is here with what various mutual fund players had to say about the issue as well, and how much of it is warranted as well. Sajid, prima facie, looking at the compulsions which the mutual fund industry operates in, you would expect that this is the nature of the business. But what did the report say, and how did the industry react to it?
You know, you need to put it in perspective, because this is not the first time that it's been talked about that the entire credit risk is getting passed on to investors. You know, you had in December Uday Kotak talking about it, where he said that the entire financial model has changed and regulators haven't kept pace with the change. Earlier, your savings used to get funneled into bank deposits. Now the savings are getting funneled into financial market instruments in the form of liquid and money market funds. Now, of course, liquid and money market funds have a large portion of HNIs, corporates, and high net institutional investors. So they're much more, you know, learned as compared to a retail investor. But the fact which Mr. Kotak was trying to say is that even though they are moving towards that, the perception that they go with the perception that it's as secure as a bank deposit, and so they're not aware that the entire credit risk will fall on them at point of time, because mutual funds are by nature pass-through instruments. They take a fee and they pass on the entire credit risk, and they pass on the entire returns as well to the customer, unlike a bank which charges interest and all. So that's one of the you know, issues. That's the background to it. The other but mutual fund industry is you know, pushing back on this, saying that, you know, this is a pass-through instrument. You cannot compare it with a bank.
True.
The second thing which they are saying is that, you know, there are certain you know, due diligence which is now been done, or it was done. If you look at the industry as a whole, liquid and money market account for nearly 19 lakh crore of asset under management. And in the last decade or so, what has been the total amount of default that has happened? 400 to 500 crores, which is very minuscule to the kind of, in the context of the entire AUM which you are talking about. So you have to put that in perspective, and the regulator, RBI, should be the one we should be learning from mutual funds, because how they have been able to manage the defaults. You put the same money in banks, you end up losing your capital and NPS coming in. So that's the argument industry is putting through. The other thing which industry is saying is that there is fair valuation methodology which has been put up by SEBI, and that ensures that there is no undue risk which is there in any of the instruments. Of course, there is always a credit risk which happens. If you invest in gilts, there is always an interest rate risk which happens, and the entire risk gets passed on to the customer. But do you say that gilts are unsecured? No, because it's backed by sovereign, right? So the point they're trying to make is there is a fair valuation methodology which is there, and now SEBI has come out with side pocketing, which means that the entire credit risk instead of snowballing can be contained and into a separate container, and the entire portfolio is secured, is secured to the extent. Of course, it's mutual funds are risky in nature, so they would be there, but that's the reason why there is a minimum threshold of investments which liquid and money market instruments make. AAA paper for or there is a threshold of AA and above which they invest in. Now, if those papers become unviable, or there is a credit risk arising because of that, the regulator should be looking at why that is happening. Like in the case of IL&FS, the exposure was 6,500 crores. Now, if you look at the entire thing in perspective, the regulator, RBI, was the one which was supposed to be governing NBFCs, and how did an NBFC turn out to be a hollow one? Credit rating agencies, why didn't they do it? Because they are following guidelines which have been given to them, saying that you have to invest in only AA and above papers. So if those credit ratings come down drastically because there was apparently mismanagement, then the blame cannot be put onto the vehicle because it's a pass through. You have to look at the reasons why that the credit rating came down. So that's one that's something which they've been talking about. The the argument that you should have a additional capital or a reserve requirement, they're saying that it's not, means they are cognizant of the fact that they need to get retail investors into it, and so the protection level has to be high. But that's have to be a thought out process, and not capital and reserves are the way to go, because otherwise there's no difference between bank and mutual funds.
Yeah, and I think a lot of these arguments will find favor with probably some investors as well. I think a lot of these arguments sound legitimate as well, but it's a bit of...
But it's a vehicle, right? So at the end of the day, so as one of the CEOs put it, we get a limited fee. We don't charge 18 or 19% interest, or we don't take a percentage of the profits. Irrespective of what the profits are there, we pass on the entire credit risk, we pass on the entire returns. Unlike in banks and NBFCs, if they have higher returns, it goes to the bottom line. Here, it goes to the bottom line of the customer.
Yeah, well, fair arguments both ways, I would reckon, but I think the mutual fund industry has made some very legitimate arguments out here. Sajid, thanks for putting that into perspective. It's something that broke out post-market hours yesterday, and important in the aftermath of all that's happened in IL&FS. The next piece on First Word today. Lower crude prices may have put a smile on consumers' faces in the last 2 months of 2018, but the same can't be said about oil marketing companies which process the crude. That's because the inventory is usually bought earlier. Sameet Sarkar's put this in, or here, to put this into perspective. Sameet, thanks so much for joining in. What can we expect from OMCs?
Well, you can expect a loss. There's a high probability that all the three oil marketing companies may come out with a loss in the third quarter of financial year 2019. Now, this is because of two reasons: the sharp fall in crude prices, and second is weak gross refining margins. Now, in Q3, crude averaged 9% lower compared to last quarter at around $68.81 per barrel, as compared to $75.89 per barrel reported by in the second quarter of financial year 2019. Now, whenever crude prices have averaged lower compared to last quarter, all the three oil marketing companies have reported an inventory loss, and that is because oil refiners maintain an inventory, and whenever the price falls, refiners that bought the stock at higher prices end up selling it through retail outlets at lower prices. Now, because of this sharp fall in crude prices in the third quarter, there's a high chance that they might report an inventory loss. Now, if you see in the first quarter of financial year 2018, when crude prices had averaged lower compared to the last quarter, all the three oil marketing companies had reported an inventory loss of close to 6,200 crore rupees. Post that, they have been reporting inventory profits for the next 5 consecutive quarters, and in Q3 they are expected to report a loss for the first time in the last 6 quarters. Now, secondly, concerns around this oversupply amid a tepid demand growth have also weighed on the gross refining margins. In fact, in the month of December, if you see, it went as low as $2.38 per barrel, that is the Singapore gross refining margins. However, for the quarter ended December, Singapore gross refining margin, that is the Asian benchmark, averaged at $4.3 per barrel. That is the lowest at least since the third quarter of financial year 2014. Now, a lower gross refining margin means that the oil refiners will earn less for every barrel of processed crude. However, all was not bad for the state-owned oil marketing companies. Now, this fall in crude prices at least helped them to recoup their losses in the marketing business. Now, despite the fact that government had asked them to bear the 1 rupee impact on the gross marketing margin, if you see, the actual gross marketing margin that they earned in the third quarter on an average was higher compared to the second quarter. In third quarter, on sale of every liter of petrol and diesel, the average gross marketing margin earned by these oil marketing companies were around 3.6 rupees and 3.2 rupees per liter, which was higher compared to the second quarter of financial year 2019. Now, this sharp rise in the gross marketing margin will definitely boost the marketing segment of all the three oil marketing companies, especially HPCL, because that earns the most through sale of retail fuels in its EBITDA, and that's the reason the HPCL will see a big boost coming in from the marketing business. However, an inventory loss and a lower refining profit will weigh on the overall profitability of all the three oil marketing companies.
Sameet, thanks for putting this into perspective. So it won't be a particularly good reported quarter 3 from the oil marketing companies. Do stay braced for that. However, it could be a good 2019 maybe for another sector. Now, the bigger tile makers were supposed to benefit after the GST rollout. Everybody thought that, right? With the industry expecting unorganized players to be forced to move into the tax bracket. But 1.5 years later, the story is very different. The stock prices of the top 3 tile makers in the country are at multi-year lows, if not at lifetime lows. Can 2019 be different, as there are 2 distinct factors working in the positive direction for them? Yash Upadhyay is here with the details. Yash, good morning.
Morning, Neeraj, and you rightly mentioned 2018 was one of the worst years for tile makers. Kajaria, for one, was down almost 33% on a year-to-date basis, which is the lowest in over a decade. Asian Granito, Somani Ceramics, both down well in excess of 60%, which is again the lowest that they've done on a YTD basis since listing. So clearly there was much pain for the tile makers, but there were 2 key reasons which impacted this, and they seem to be turning around for them in 2019. Firstly, the higher gas prices. So gas typically accounts for almost 20% of the total expense, and not the raw material cost, but the overall expense for the tile companies. Gas prices, they tend to move in tandem with the crude oil prices, and we've seen how crude oil prices have corrected sharply, going from the levels of almost $80 per barrel to about $55 that they are trading at right now. So that in turn has brought down the gas prices. So because of those high gas prices, we saw their margins correct sharply. So for example, Kajaria Ceramics, for the last 10 quarters, this is the margin trend. Kajaria did almost 21.4% margins in the first quarter of FY17, and that number has gone down to as low as 15%. For the other 2 players, the margins have almost halved. So take a look at the margins for something like a Somani Ceramics. They've gone from 8.1% to 4.2%. Asian Granito, 11.7% to 6.4% as of the latest Q2 numbers. As I mentioned, this was on account of the higher gas prices, but they have corrected by almost 40% in just the last 3 months. So gas prices, the cooling off of the gas prices, they should help the margins. The gas price chart over here, that shows we had touched the levels of almost 350 rupees, and that has fallen to as low as 208. So that is a correction of almost 40%, and that would augur well when it comes to their margins. Secondly, there was a clear pressure when it comes to pricing, and there was a lack of pricing power for most of these tile maker companies, which in turn impacted their realization, and the realization picture should also come up on the screen. And you'll see that most of these tile companies saw their realizations fall on an average of almost 15 to 25% over the last 10 quarters. So for Somani Somani, Kajaria, as well as Asian Ganito. Asian Ganito reported realization of almost 400 rupees per square meter, and that is down to as low as 314 as of the Q2 numbers. Similarly, for Kajaria, 370 to as low as 327. For Somani, is down from 360 to 300. So for Kajaria, is down from 360 to 349. So we have seen massive correction in their realizations, down almost 15 to 25% over the last 10 quarters, and that was on account of the pricing pressure. But what we are seeing now is that there has been some bit of a recovery there, because in the last month itself, most of these tile makers have increased prices for the ceramic as well as the vitrified tile segment by 1.5% each. And what we understand from brokerage reports is that most of the players based out of Morbi too are witnessing pricing pressure, and they too are taking price hikes. Secondly, over the last 1.5 to 2 years, there had been significant capacity increase by the Morbi players. And with the GST rollout and the e-way bill coming into effect, slowly these things have started to impact their business, and the ramp up in capacity has slowed down. So that too has helped put a curb on the supplies, and in turn protected the prices. Thirdly, brokerages continue to be optimistic on account of the long-term drivers of demand being intact. So GST, housing for all, the rapid urbanization drive, that would spring up a surprise when it comes to their volumes, which have, by the way, been consistently good, as well as the government initiatives like Swachh Bharat and Smart City. That should augur well for demand, at least over the next 2 to 3 years. And lastly, the valuation comfort, the sharp spike, the sharp drawdown that we saw in 2018, that means that they are now trading at fairly attractive valuations. So Kajaria, that one's trading at an FY19 PE of 34 times, which is at a discount of its 5-year average PE of almost 37 times. Similarly, for Somani and Asian Ganito, being slightly expensive, but Somani trading at about 29 times versus its 5-year average of 32 times. Having said all of that, there are key risks to watch out for. One being any prolonged slowdown in real estate. So for the last 2 to 3 years, we've had RERA, GST, that has had an impact. So any slowdown in real estate activity, that would be a big negative for the tile makers.
Okay. We'll watch out. So some tailwinds, maybe 2019 is better, and there's some fundamental reasons outlined by Yash as well. Thanks a lot for that, Yash. That's all that we have on First Word today, but lots more lined up for you on IndianOpen. BEST has received the regulatory nod to extend the power purchase agreement with Tata Power for 5 more years. We discussed that with Praveer Sinha of Tata Power. Talk about markets and macros with Mahesh, Patil of Aditya, Birla, Sun Life AMC, and decode the December auto sales with Jitendra, Adhia of Atul Auto and Bharat, Madan of Escorts. But after this break, a full tilt towards the day's trade.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
Or maybe they'll lay the foundation for something new? I hope my ideas survive.
I've had some great ones.
And there's still
So much left to do.
who knows what life will bring.
The road is long.
The journey full of promise.
The pursuit
Only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open right here on Bloomberg Quinn. Let's see how the Asian markets are faring at this point. Well, a tick of green across the screen. Never mind what's happening to the Dow futures and the stock of Apple. We'll start off in the green. The question is, can we do further? Can we move ahead? Or will we get pegged back? Well, $1 million question. We'll get to know about it a bit later on. For now, let's try and look at the setup for the morning. And let's get in Agam Vakil, who brings us the FNO setup for the day. Agam, not the most pleasant of days yesterday, primarily because of autos, but how does this set us up on the positioning front?
No, Neeraj, it wasn't pleasant. At least as far as the Qs are concerned, they're not looking very good. Even though the SGX Nifty is indicating an up move here. Well, let's pull up these variables and we'll see how they're panned out. Because let's start off with the futures. For the Nifty futures, what we've seen is a 4% addition in open interest. This is when the Nifty fell. 3 sessions before that, we have seen very little change in the open interest for the Nifty. It's only that we've seen an increase once we started seen a little bit of correction in the Nifty. Coming down to the Nifty banking futures, while we saw considerable accumulation in the previous 3 sessions, this time, even as we saw weakness, there was some amount of unwinding that took place in the Nifty banking futures. The India VIX, of course, moved up higher by around nearly 7%, moving back above the mark of 16. And when your open interest distribution is concerned, we're starting to see a little more writing. If you can take a look at the changes in open interest and bring that plate up, we're starting to see a little more writing around the higher level calls, such as 11,000, 11,100. Of course, on the lower end, we still have the support coming in from 10,500, 10,600 puts. So, traders also took advantage of the fact that we saw an expansion in premiums in the 10,500 puts to go in and sell. But when it comes to your stocks, Adani Power is in band right now, and among other stocks, and there were a lot of stocks out there, but I'm going to take that out. Your Nifty put call ratio at around 1.47, your Nifty banking put call ratio at 0.84, coming down to your stocks, and this is where we saw a lot of weakness. Look at Eicher Motors down 9%, TVS Motor Company down 5%, Jet Airways took a big hit yesterday, something like Berger Paints or Hindalco, all of them down, and substantial increase in open interest, as you can see on your screen there. Even in terms of unwinding, we have seen longs taken earlier, now unwinding for the likes of Ajanta Pharma, Chennai Petro, Syndicate Bank, or for that matter, Oracle Financial Services, as you can see on your screen. So a lot of weakness out there. The real question is if we can expect recovery in today's day of trade, and we can see a reversal of what we saw yesterday coming through, especially in the final hour of trade.
Well, let's wait and watch. Today, the Dow futures and the Nasdaq might be against us as well. So it'll be interesting to anchor countdown today and see what gyrations take shape. Agam, thanks for putting that into perspective. Well, let's talk about all of this with our fundamental guest for the day, Parthiv Shah of TRACOM, stockbrokers with us on the show. Parthiv, new year, new show. Thank you so much for joining in, and a happy new year to you and your team.
Good morning, Neeraj. Happy New Year to you as well, and to the entire team and all the viewers as well.
Thank you so much, Parthiv. Well, we discussed the market prognosis at length. I don't think it's changed too much. But let's talk about some specific developments that have happened between the last time and this time that we spoke about. Firstly, the stocks in news today, the banks, BOB, Dena Bank and Vijaya. Now, the merger ratios clearly give out the fact that Dena Bank will correct today. Maybe there's not too much for Vijaya Bank, so that might too take a pullback. My question is, because the swap ratio seems to have been done on the basis of the price that existed on 17th September 2018, and therefore seems to be a net positive for BOB, would you go out and buy a stock like BOB because it is amongst the better performing banks, or would you believe that saddled with Dena and Vijaya, the performance might dip a bit for BOB in the ensuing 6 to 9 odd months?
Absolutely, Neeraj. I think this is a fantastic question, and I think probably you'd be knowing my commentary as well that amongst all the PSU banks, I think if at all I had to stick my neck out and pick one bank, it was Bank of Baroda. And it was even before the merger ratio is out. And I believe the merger ratio is extremely rational because I think the only pain for Bank of Baroda is going to be Dena Bank. And Dena Bank, I think as per the merger ratio, if I go back and do the calculation, quotes at a 27% discount to the current market price, which is rational because I think Dena Bank probably will take a lot more time in terms of turnarounds and all the synergies that would pan out vis-a-vis something like a Vijaya Bank, which is a lot more stable. I would say the asset quality at Vijaya Bank and in terms of the book, almost 1 lakh crore worth of an advances that it brings along, I think it will synergize lot faster. No doubt it's going to be a slight challenge for the initial 6 to 8 months, but I think I'm loving the fact that a company like Bank of Baroda, I think where one would have never thought that, they would have a huge plan to integrate these two companies with, a lot of investment in the digital segment. So I think banks which are digitizing and banks which are using the latest technologies, I think are the ones which will do well. And despite being a PSU, I think I must say that Bank of Baroda has taken that stride. And I think look at the valuations. I think this bank is quoting at 0.6 price to book multiple, which means at current juncture, even after the merger, probably the market is kind of talking about willing to write off almost 30-40% of its assets, which we know for the fact is not going to happen. Rather, I think Bank of Baroda's asset quality relative to many of its PSU peers has been lot better. And this is a bank which even after the merger will have a CET1 ratio of 9.1%, won't need that upfront capital from the government, has its own ability to raise funds. So I think looking into all of this will be like the second largest PSU bank. And I don't see much downside from here. And I think even if one were to envisage that if one is buying Bank of Baroda here and even in good times selling at one price to book, there's a lot of money to be made. So yes, I think it's a contra view. I think I'm not liked PSU banks since a long time, but yes, I believe that I think what has happened to Bank of Baroda and after the correction is looking extremely attractive, and somebody having at least 2 to 3 year horizon, I think fantastic returns can be made.
Okay, 2 to 3 year horizon, maybe fantastic returns can be made from a BOB. That's interesting. Okay, the other one, Parthiv, is the weakness that we've seen in the auto majors. Now, I know these stocks have been discussed to death over the last 2 days, but it's a new day. It's a new set of viewers who might be wanting to know if a Mahindra & Mahindra 8-9% lower is a good buy. An iShares after the 8.5% slam dunk that happened in a single day of trade yesterday, how much downside still persists out here? Is it even possible to predict that, Parthiv? And is it even possible to guess whether this is a good level to buy, or there'll be better levels and thereby better valuations at which you can buy into these auto names?
See, frankly, if I have to talk about Mahindra & Mahindra, I think I would certainly go with the commentary of the very credible management, Mr. Pawan Goenka. And I think he did attribute it to the fact that it was a tepid festival season buying. Even if I have to talk about the more important, which is the rural tractor segment. And also, I think leading to all the problems that were there with the NBFCs, because we know in things like tractor financing, NBFCs play a vital role. And many of the good players also, someone like M&M Financial, which is relatively far better in terms of its ALM, were, I think, slightly cautious, and I think probably the disbursements that they had were slightly slower, which is not like a phenomena which will last long. I think the liquidity situation has certainly improved. So one might assume, I think it's very difficult to judge these plays on just a 1 month kind of number scenario. Maybe I'm even penciling down that January numbers could also not be great. So I think it's not like about 1 or 2 months. I think if we look at a trend year on year, and also I think going ahead, and also all the things that the government might do to revive the farm sector, because it's a political move as well, I'm not really worried about a player like M&M, where I think definitely we are expecting, with all the new launches in the tractor segment, having almost 42% market share, which is a high margin segment, they will revive. And I think encouraging sign was that Escorts also grew extremely well. Maybe they might be taking some market share, but I think it's not so gloomy out there for the tractor players. And M&M, yes, the other vehicles also that they are India manufacturing. They have a nice pipeline going ahead and which will catch up. So I am bullish on M&M on every declines. Any further decline of max 5% from here would be very lucrative levels to enter. But yeah, talking about the other consumption related passenger vehicle theme, it seems there's apparently something really wrong in terms of how they're going to pan out, because if a player like Maruti talks about a single digit growth for this year, we might see little more pain, and valuations are not really very lucrative at this juncture. So I think certainly in those plays which are good long term fundamentally, I would not mind a 10 to 12% sort of a correction, before which I think one would start buying in a staggering manner. So I think for those plays one should wait for apt levels, but in a player like M&M, I think these corrections are good levels to enter.
Okay. Maybe good levels to enter right now. Let's wait and watch what happens in the session today or over the near term as well. This weakness, of course, that these stocks are exhibiting. We'll try and talk to our technical experts if the chart suggests some more downside, even if fundamentally these are good levels to enter at these levels for some of the auto names. What about some other stocks in news? Remember, we have the management of Tata Power coming in a few minutes from now. So I'll hold on to that piece of news for a discussion after the management commentary. But let's get in our research team to talk about some other newsmakers in the session today. Some brokerage notes as well, which could make the stocks react. Sameet and Nikki join in for that. Good morning, both of you. Let's start off with the stocks in news first.
I'm going to start off with GMR Infra, where Malaysian Airport has terminated the proposed sale of 11% stake in GMR Hyderabad to GMR Airports. This was terminated after Malaysian Airports failed to fulfill the obligation by the timeline of December 31st. Asian Granito, which has given a clarification stating that the company has already paid in a sum of around 3.5 crore under the differential duty for Directorate Revenue Intelligence finding. But however, at this point of time, it cannot assess the actual impact of default over the listed entity and financials. Third on the list is Motherson Sumi Systems, where ICRA has revised an outlook from positive to stable across various rated instruments worth around 1,800 odd crore. Indian Oil Corporation separately has said that the company doesn't plan to recover the losses which have been incurred under government decision in October, wherein the government asked these fuel retailers to cut gasoline and diesel prices by as much as 1 rupee per litre. In Baldale, which is an important one, we're looking at Triveni Turbine, where Nalanda Indian Fund has sold in more than 1.5% stake in the company for a consideration of around 103 per share, which implies a discount of more than 12% from the current market price. And on the buying side, we have SBI Mutual Fund, which has acquired a similar portion of stake in the company.
Very interesting. Triveni Turbines, an interesting pocket in which it operates as well. Nikki, thanks for putting that into perspective. Now, before we get to the brokerages, Sameet, the TRAI data that came out yesterday, has it thrown up some really material trends?
Well, the key interesting trends that stood out for me was first that if you see the overall subscriber numbers, they might look a bit muted. And for Airtel, if you see, it is showing a decline. But actually, Airtel has increased its active subscriber networks on its network. Its active subscriber networks have increased by nearly 33.7 lakh. And this is the first time in last 4 months where the company has seen an increase in its active subscriber numbers. However, this number is very small when compared to Reliance Jio, which added nearly 84.6 lakh active subscribers in the month of October, aided by the launch of JioPhone. Now, for Vodafone Idea, their active subscribers fell by 30.1 lakh, and this is for the 6th consecutive month where the company has seen a decline in its active subscriber numbers. Now, in the last 6 months, the company has lost nearly 2 crore active subscribers. Now, on the rural side, if you see, Reliance Jio was the only private player to add rural subscribers in the month of October. Now, in Jio's rural subscriber base increased by nearly 64 lakhs, that is nearly 61% of the net additions done by Reliance Jio in the month of October, which is the highest at least since June 2017. Lastly, though the overall subscriber numbers might look muted for the telecom operators, that they are yet to see the full impact of this minimum recharge packs that was introduced by Airtel and Vodafone Idea, and also the eKYC process norms that was mandated by DOT. Now, the full impact of this will be visible in the month of November, and that's the reason it's not coming in the month of October.
Okay. What about brokerages? Anything that stands out?
Well, one of them that stands out is on the Indian tractor industry, where HSBC says that there is no doubt that the tractor growth has been slowing down, but it feels that the market is overly concerned on this. Now, it sees that the demand is still healthy, led by a few key states. And it also believes that the FY20 outlook seems to be better as against the street expectations of a significant decline in volumes. Now, it is expecting the pre and post-election focus on rural economy will aid this kind of growth in financial year 2020, according to the brokerage. Now, the brokerage's channel check suggests that the channel inventory is currently lower than the previous year, and the EMI collections have been steady, which show that there is no stress when it comes to the demand for tractors, which is contrary according to the market fears. Now, for Escorts, the brokerage has maintained its buy rating and has hiked the target price to 980 from 950, as low inventory and decent demand in key states provide better visibility for Escorts going forward. And for M&M, it has maintained its buy rating but has cut down the target price marginally to 960 from 980 to factor in increased cost towards new launches, rising product prices and increased competition on the other segments of the company.
Okay, let's wait and watch what happens here. Sameet, thanks for putting that into perspective. Well, a few key names to monitor in the session today. Since we're on the topic of autos, just a quick one, Parthiv. You spoke about M&M and the likes. Escorts as a play has consistently been delivering the numbers. Would you wait for some weakness, or do you believe it's still a strong stock to buy?
No, Neeraj, I think I would wait for some weakness because Escorts is factoring in this fantastic news in terms of the deliveries of the numbers that it has had, and especially in the tractor segment. And when a large player like M&M is slightly struggling, I think certainly kind of bodes well for Escorts, wherein they're taking some sort of market share. But nonetheless, I think, as I mentioned, so the Escorts growth does suggest that it's not so gloomy out there. And this is despite the fact at the monthly number where I think the credit offtake from the NBFCs was tight, and the way Escorts has delivered is good numbers, but still I think it's the valuations are not at all cheap. If I look at historical levels or even at current levels, I think so I would wait for a correction. But still, I think, Neeraj, my preference would lie, if I were to play this tractor theme and the rural theme, I would go it with M&M, because M&M also gives me that comfort of the sum of part valuations that I get as a holding company, even after a discount of all the companies it holds. And I think even the core business of the auto sector should turn around. And I think not only they lost their share in the SUV segment with intense competition, but the new launches seem to be quite exciting, and I think they'll be able to maintain a 12 to 14% sort of a margin band, which should bode well. Along with decent volume growth of tractors, I think M&M should be a better value pick as compared to Escorts.
Okay. Parthiv, stay on. I would want to talk to you about Tata Power as well, but let's first talk about Tata Power with the man himself. Remember, the Maharashtra Electricity Regulatory Commission has approved BST's proposal to extend the 667 megawatt power purchase agreement with Tata Power for another 5 years. This power will be supplied from the Trombay thermal plant and the hydro plant in the state. To discuss more about this agreement, we are now joined by Mr. Praveer Sinha. He's the Chief Executive Officer and Managing Director of Tata Power on the phone line from Mumbai. Mr. Sinha, good morning. Neeraj here. Thank you so much for joining in. I wouldn't say congratulations, because I remember you quite anticipated this. But an overhang of sorts goes out. Do the terms and the conditions remain the same, sir?
Thank you, Neeraj, for having me on the call. And this is a big step forward, because for next 5 years, BEST will continue to take power from Tata Power, combined hydro and thermal power plants, and this will remain on the existing terms and conditions, which is on a pass-through basis.
So, what you know, from an analyst community perspective, Mr. Sinha, an overhang in the sum of the part valuation goes away, and which is why this became very important. I heard you say that the terms and conditions remain the same. So, am I to assume that the cash flows that this business enjoyed in at least the preceding 9 months or the preceding 1 year would essentially be the kind of cash flows that Tata Power will continue to get from this same agreement?
Right, that is the type of cash flow that we will have, because this is on a pass-through basis. Part of the power, of course, will go to BEST, and the balance goes to Tata Power Distribution. And this is under 62 that the tariff will be determined by the regulator. So it's a very good development that has happened.
Okay, how is business by and large looking, Mr. Sinha, on the Mumbai front? Because ever since Adani took over Reliance Energy, there was a lot of conversation about how customers on both sides are weaning away to the other side, etc. There might be loss of business or gain of business for both the players correspondingly. How is the scene looking like?
What we need to look at it is from a long-term perspective in terms of what quality of service is being provided. As far as the tariff is concerned, it of course gets determined by the regulator and based on the input cost of power and how you have tied up your other resources. So there may be a certain aberration here and there, but these are outliers. I think on an overall basis, the consumers of Mumbai are looking for stable and quality supply of power. And whatever tariff hikes that takes place on an annual basis, they have a temporary impact and thereafter it stabilizes.
Okay. So you're not seeing any kind of, loss of customers. I know business wouldn't be impacted, Mr. Sinha, because the quality of service is fine and, the quantum of power that is being consumed is only going up, I would presume, but no loss of customers by Tata Power in the preceding 6 months.
Yeah, nothing very dramatic or nothing very substantial. Small changes keeps on happening. Few get added, few leave. That again is based on a temporary phenomena. And what we have seen in last many years is that once they start liking your service, they continue to stick with you, notwithstanding the fact that the tariff revision takes place 1 year or reduces in the subsequent year.
Okay. Mr. Sinha, I presume you're in a silent period, so you can't talk too many numbers. We'll probably talk about them once your quarterly numbers are out. But happy for you. Congratulations on this extension. Thanks so much for joining in today.
Thank you. Thank you very much.
That's a quick conversation with Praveer Sinha, MD of Tata Power. The power purchase agreement gets extended. And Parthiv, just a quick follow-up question since we are on the topic of Tata Power. I think my conversation with analysts seemed to suggest that if this wouldn't have gotten extended, then the generation assets in Mumbai, that cash flow would have gotten impacted and therefore the sum of the part valuation would have gotten discounted by that much. Does this overhang mean, or getting out, mean that there will be upsides to Tata Power immediately?
See, not really, Neeraj. To be very frank, I think, yes, you made a very absolutely right point in terms of if at all this was not extended, then I think the sum of part valuation would have been impacted. We know for the fact that we are all betting on the Mundra power project, which is a huge overhang, the net worth erosion for Tata Power. And that's the key reason why Tata Power has not done anything as a stock since ages, despite having other fantastic assets. And as such, I think both for Adani Power and Tata Power, the Mundra asset, the resolution of it has gotten delayed. There were some plans about the Gujarat Discoms, I think, buying that asset, and I think though these people would have not made any money, but even not bleeding further, I think would have been great news. But that's not been really settled, and probably I really doubt going into the elections whether that matter would get settled or not. So I think this particular overhang will not certainly re-rate Tata Power, because we still know that Mundra thing still is a hanging sword. But I think one fine day that resolution would take place, and that's the point in time, or any sort of, I think, buzz regarding that and any sort of conviction one gets regarding the resolution of Mundra, I think Tata Power will certainly be a re-rating candidate. But for now, I think I would take an avoid for Tata Power.
Okay. Keep in mind, that's the bigger and more important trigger for Tata Power. But brokerages, if we believe, there could be some upsides. Parthiv doesn't believe there will be a substantial upside until the Mundra resolution happens, which is also a very fair point. Let's wait and watch what happens to Tata Power in the session today. However, it's time for a special segment, Bloomberg Edge, before we get in our technical experts. This is the segment where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's on your radar today?
Morning, Neeraj. So we're tracking Greaves Cotton on the charts, and the proprietary Bloomberg indicator, which is the trender indicator, that has generated a sell signal. Let's first try and understand what it is. It basically uses the average true range for the calculation, and it helps generate buy or sell signal. How do you interpret it? You go long when the trender indicator flips its color from red to green, and you sell when the trender indicator goes from green to red, which is the case when it comes to Greaves Cotton. Now, we saw yesterday that on the back of very heavy volumes, the stock closed almost 2.5% lower, and it managed to close very close to the lowest point of the day. And with that, the green color of the trender line, that would flip its color to red. So for the last 2-3 trading sessions, we are seeing that it was consolidating near the price of about 120, and it found it very difficult to sustain above the levels of 130, and it had crashed to those levels. But now we are seeing renewed selling coming into the stock at these levels.
Okay, and how well has the trender indicator worked for Greaves Cotton in the past, Yash? It's not normally a stock that we talk about too much on the trading front.
Right. So, Neeraj, on an average over the last 1 year, every time that the trender indicator has flipped from green to red, on an average, one could expect returns of more than 4% over the next 10 trading sessions.
Okay, interesting. Thanks a lot for that, Yash. So, do watch out for Greaves Cotton in the session today. That's the Bloomberg Edge. For a deeper insight on specific trades or equities at large, visit BloombergQuint.com, wherein S. Kannan decodes Bloomberg charts on a specific stock or an index every single day to identify the technical triggers that have emerged in them. On today's Bloomberg Edge, we featured Ashok Leyland and what its relative rotational graph and open interest charts indicate. That is a BQ Blue exclusive. Okay, let's take it to our technical experts now and start off into a technical and derivative experts. Start off with Sameet Chavan, is Chief Analyst for Technicals and Derivatives at Angel Broking. Joins us on the show, as does Chouhan, Senior Vice President for Technical Research at Kotak Securities. Gentlemen, both of you, best wishes for a new year. Thanks so much for tuning in today. Thanks for joining in today, rather. Sameet, let's start off with you first. How are you approaching trade today?
Morning, Neeraj. Happy New Year to you all as well.
Thank you.
See, as far as the trading activities goes, the kind of momentum we saw a couple of days back toward the fag end. To be honest, we were expecting a breakout beyond 10,924, but yesterday's session was quite on an unexpected line. We saw massive selling pressure during the day. The only positive thing of yesterday's session was we managed to hold its important support level, 200-day moving average, which was placed around 10,735. So that becomes a key support level now. So as long as this level is held, we believe that one should be with the positive bias and one should hold on long position. And once this level is breached, one should exit their long position, and as a contrarian trader, one can go short as well. So at this juncture, we believe that we have a range wherein 10,920 on the higher side would act as a resistance, and a breakout beyond that would unfold a fresh leg of the rally. And on the lower side, 10,735 is the level to watch out for. Within this, we believe that a lot of individual stocks are likely to give better trading opportunities.
Okay, so individual stocks may be better trading opportunities. Shrikant, what would your approach be? Would you trade the index at all, or would you be stock specific as well?
Good morning, Neeraj. Happy New Year to you.
Thank you.
And May 2019 bring you and your entire team a lot of success and happiness.
Thank you, Shrikant.
See, Nifty is very clearly in a very broader range, and certainly we should look for trading in Nifty, because there we see a specific activity in the market. No doubt that it is highly volatile, but it is very good for those who are intraday traders. Yesterday the market was it was into complete sell-off. Today, if there is any higher opening, we should look for taking some contra bets of going short in the market, close to 10,830, 835 levels, with a stop loss close to 10,850. Again, we are expecting on the downside 10,735, 740 as Sameet said, and below 730 certainly we can expect trending fall in the market up to 10,650 or 690. So broadly, we are of the view that the market is now entering into triangle consolidation. It will take time to again move towards 11,000 levels. But yes, before that, we are expecting market to move towards 10,650. And that's why the strategy should be to look for taking some short bets if there is any bounce back during the day.
Okay. Let's then target specific stocks and try and figure out what to trade. Shrikant, let's start with your ideas first.
See, I would like to go long on TCS because currency was around 70.05, 70.10 yesterday. It was around 69.50, 69.70, and 69.50 was the biggest hurdle for currency in 2018. After retesting those levels, again currency is going to weaken. That's our view. So we are of the view that TCS is heading for at least 1960, 1980 in next few days. It's a buy at this level with a stop loss below 1880. We also like DHFL, but there we are of the view that we should look for taking short bet, taking a contra bet of going short. It was around 243, 244 levels. So here we should look for taking a short call with a stop loss of 245, and we can expect 235 on the downside.
Okay, so watch out for these trading ideas. These are the ones that Shrikant believes could have a move in the session today. Sameet, Chavan, your strategies and 2 buy calls. Interestingly, not large caps, not financials, not industrials, but Sun TV and BEML. Why these?
So till the time Nifty doesn't break 10,735, we are likely to continue with our positive stance. And these are 2 stocks which were clearly bucking the trend yesterday also. Sun TV, since last 3 months, it has been consolidating around its weekly 200 moving average. And looking at past couple of weeks price action, we are of the opinion that the stock has formed a strong base around its important support. And from here on, it is due for some kind of relief move. So we would go long in Sun TV. Our immediate target would be on 652. It's a positional target, with a stop loss of 598 on a closing basis. Apart from this, BEML, which has already given stellar moves in last couple of months from low levels of 525, 530. Trading around 900 plus levels now. Yesterday, if you see, despite the broader market having massive destruction, the stock managed to clock decent gains, and hence we expect this outperformance to continue. One can go long for a target of 988, stop loss at 894.
Okay, so those are couple of trading ideas from Sameet, Chavan as well. Stay on, gentlemen. Just about 27 seconds left for the markets to kickstart trade. So let's try and bring you up to speed with what the rest of the world is showing. We'll probably start off just marginally in the green. Keep in mind, maybe because of the pressure on the world futures, the Asian markets have now slipped into the red. Hang Seng was 0.5% in the green or thereabouts, is now down 0.5%. The SGX Nifty, which was about 1/3% in the green, is now barely in the green. And the Dow futures are trading with a tinge of red because Apple as a stock has just come off quite rapidly after it's cut the guidance. So the world markets are not a happy place. Keep that at the back of your mind. For now, the pre-open rates may be all over the place. Let's wait. Let's give them a chance to stabilize and then try and figure out what the indices would do. At the end of the 8 minutes, we'll get to know. I wouldn't be surprised, frankly, even if the SGX Nifty was showing a tinge of green, that we'll start off marginally in the red. But let's wait and watch. Specific pockets of strength or weakness. Can't not help but start with Eicher Motors and Mahindra & Mahindra, 2 stocks which were in the thick of action yesterday. Let's see what's happening there today. Maybe a flattish start for Eicher, but it's had a big drop, so that could be warranted. M&M2, 2 days on a trot, fell about 4%. So after that 8.5%, 9% fall, maybe there is some stability, or maybe there's some more downside. We'll get to know about it in a few moments from now. Tata Power is that one name which could have a positive reaction as well. So let's wait and watch what that is doing in the session today. About 1.5% for now, but the news is positive. It could bring about a bigger reaction as well. Let's wait and watch what happens here. Then the PSU banks, so Bank of Baroda, Dena Bank and Vijaya Bank will come up. BOB, I don't know for 10% upside or no, but there could be some upside. But I presume Dena Bank would start off lower. Yes. And frankly, the valuation level was about 13.13 adjusted. So therefore, Dena Bank, I wouldn't be surprised if it starts off this low. I don't know if it'll be a 20% downtick. It might be 10%, 12%. Let's wait and watch though. But a downside for sure. And Vijaya Bank to a downside for sure. So not surprised that these stocks are reacting the way they are in the session today. What else? Reddington should come up on your screen. Maybe I know HCL Info gets clubbed, but I don't think HCL Info does too much of Apple work. But Reddington, because Apple has cut its guidance, I don't know if the India business guidance has been cut as much as well. That the management of Reddington will be best placed to talk, but there could be a sentimental negative on Reddington in the session today. So likely to start off about a couple of percentage points lower. Remember, 27% of its revenues come from Apple products. Don't quite know whether that 27% has been revised downwards by Apple out there, and therefore don't quite know if Reddington will suffer or not. But nevertheless, as I said, there could be a sentimental impact. Reliance has this unnatural 5% downtick, as a result of which the Nifty is deep, or rather about 0.75% in the red. Now it is improving, and with that, the Nifty 52 is moving up. HDFC Bank was this unnatural 2.5% downtick. I doubt that would be the case in the session today. What else? Nothing too dramatic. It's essentially these PSU banks got to do with Reddington and a few others, and maybe, just maybe, some bit of movement in the oil marketing companies. Crude did bounce a little bit in the session yesterday, so maybe BP, HP, IOC could have a start which is marginally in the red. Let's wait and watch what happens here. But BOB, the star of the morning, looks like starting off higher in trade. Wondering if you would even consider a trade out here, Shrikant, on a Bank of Baroda. I don't know if it starts off 10% higher or no, but there is a fundamental reason why a B or B could have a bounce today. After it, let's say it starts off about 5 or 6% higher, would you be comfortable taking any kind of a long trade in a Bank of Baroda today at those levels?
See, certainly, we should avoid taking any buy call on BOB because if we go through with its overall pattern, then it's a weak recovery that we are seeing on Bank of Baroda. At the same time, it is because of some fundamental adjustment, it is opening higher. But after opening higher, we should we need to see that whether Bank of Baroda can manage its gap up opening or not. That is very, very important. And if we see that, okay, the market is, the stock is holding its gap up opening area, then certainly we can look for taking some bets. But currently, if there is any higher opening, certainly we should avoid taking any bet on Bank of Baroda. But yes, Neeraj, we like Bank of India, and there we are seeing a very good positive divergence. Last time also we discussed, and we are of the view that if there is some activity we are going to see in all PSU banks in next couple of maybe months, or it will take time, but certainly we should focus more and more on Bank of India.
Okay, watch out for BOI is what Shrikant Chouhan seems to be saying. What's also likely to start off lower are the oil marketing companies, BP, HP, IOC. In fact, the oil and gas space looks poised for a fall. Reliance has actually recovered a little bit of lost ground. Keep that at the back of your mind. But BP, HP, ONGC, all three look like starting off slightly weak in the session today. Well, crude bounce and these stocks tend to correct a bit. These are very, very short-term moves. However, Sameet, Chouhan, would you play them? BP, HP or an ONGC futures, would you look at them at all?
Senior, within this space, BPCL have been our preferred pick, and we have been actively buying this particular counter from the levels of 290. We saw a series of higher top, higher bottom since the stock managed to surpass its previous hurdle of 285, 290. However, in last couple of weeks, this stock has been consolidating around 200-day moving average. It's been struggling to surpass this level. And from here on, we would expect some kind of profit booking after seeing a huge move, a nearly 25-30% jump in last couple of months from low levels. So at current juncture, any bounce back towards 365, 370 would be a shorting opportunity. In case of BPCL, one can keep a stop loss around 375. Above 375, we could see resumption of uptrend. And on the low side, if selling pressure aggravates in this counter, we could see a fall toward 340, 335.
Okay. Interesting. I must say a stock that has exhibited a lot of strength over the last few days is Z Entertainment. And in today's session too, it is looking like starting off strong, about 1% higher. Last 7 days, it's gained about 9%. So it's arguably amongst the best performing Nifty 50 stocks over the last 7 days. The best performing Nifty 50 stock over the last 7 days, ahead of even Titan Company. Parthiv, there was some downticks that came in here when this announcements about a new partner, etc., came up for Z. But it's exhibiting a lot of strength, as I said recently. Fundamentally, what's the call here on Z Entertainment for somebody who has the stock in the portfolio? Is it advisable to switch, or is it advisable to stay put with Z Entertainment?
Yes, Neeraj, you very rightly mentioned. I think there was some sort of confusion and probably some fears in terms of why the management did talk about even the move that, was a little surprising. But I think some even took it kind of positively that if a very strong hand or a strong strategic partner were to be roped in, it won't bode extremely bad. And I think unnecessarily the stock was battered down to shape. And if I were to compare some of the last quarterly results in terms of all the parameters, in terms of the advertisement revenue, in terms of the subscriber growth, in terms of the OTT business, the ZEE5, I think all of that was doing extremely well. And I think, frankly speaking, it's a fantastic franchisee. And I think in terms of the penetration, in terms of the brand recognition, I think they're extremely strong. The balance sheet strength is also reasonably good. So I think certainly, I think there are a lot of people who are betting on the media sector, wherein I think Z after this massive correction would have been a good value buy to add. So frankly speaking, to answer your question, somebody holding on to it, I think I believe it's a strong franchisee. It's a lot better placed as compared to someone like, say, Sun TV, which also being a very strong franchisee, but due to the political environment around, I think it's always better to avoid that. So I think Z probably definitely it's a hold in my opinion. And generally elections bode well for such companies due to the additional ad spend. So I think Z certainly hold over the next 6 to 12 months.
Okay, the other one in focus today would be Vodafone Idea because of these market share numbers that have come out. The fact that Jio has made its headway into rural India as well. I think the numbers haven't been quite impressive for the other two. Vodafone Idea in particular taking the stick. The 52-week low is 33 rupees. It's a stone's throw away from there, but certainly under pressure in the session today. Parthiv, again, a very difficult call for somebody to make, but whoever, let's say somebody bought into Vodafone Idea at 50 rupees thinking, oh, the stock has fallen so much, now it could rise a bit, and is now still in the red. Would you advise getting out of the stock lock, stock barrel, or is there hope here?
See, Neeraj, I think yes, it's a very difficult call to make, and the biggest problem is that now they're, as a combined entity, losing, I think, good amount of subscribers. I think almost 75 lakhs is by no means a small amount. Yet, I think they do retain a decent part of their subscribers. And very important data point to be seen will be in the upcoming quarters, how well they are able to maintain, because they have certainly launched some new schemes. And I think they will have to pump in new funds, which both Vodafone and Idea is talking about. But I think the key and the most important saving grace for these companies will be when will, I think, Reliance Jio rationalize its prices. And I think they have been garnering subscribers a lot, and I think now I think it's becoming a primary driver as a phone number, because initially there was a talk about that Reliance Jio would be like the second number, the secondary number, but now it's gradually becoming a primary driver. And the schemes that are coming out, I think they're charging around $1,600 for the entire years of subscription with very good, I think, no voice charges and a decent data level. So I think a lot of move is happening. So it'll be very important to see how the data pans out. I think at these current levels and valuations, I think it's hard call to say to just exit, take your loss. I would wait for a couple of quarters, see what happens, and if at all Reliance Jio were to even announce some sort of price hikes, we'll see sentimentally these stocks, both Bharti and Vodafone Idea, rallying. But if I have to pick one stock in this sector, I think I would still go stick my neck out and believe Bharti Airtel is far better placed. It has assets to monetize, and it has a relatively stronger balance sheet, and the subscriber loss was relatively lot lesser, and it's, I think, the only player in the country which can really face this pressure from Reliance Jio. So I think Bharti Airtel should do better, especially at a point in time when the price is rationalized in the entire sector, which will happen because at these prices the sector can't survive. Even Reliance Jio at one point in time will have to increase their prices by 30, 40, 50%. So certainly I am bullish on this sector over the longer horizon and very selected play in it.
In hope we all live. I'm not saying this in a bad way at all, Parthiv, but yeah, in hope we all live. Let's see when that happens. For the consumer, though, it may not be great news, but however, I don't think too many people bother about that right now who are investors in these companies. Minutes away from market open, though, let's tell you all that you need to know to stay ahead in trade today. The three-way merger between Bank of Baroda, Dena Bank and Vijaya Bank moved a step closer to completion. The biggest of the three banks, BOB, has announced the swap ratio for the merger. Dena Bank has been valued at 27% discount to the price yesterday. Vijaya Bank at a 6% discount to the price yesterday. Both the stocks start off lower. Only two telecom operators, Reliance Jio and BSNL, added new customers in October, but the TRAI data shows that Airtel had more active subscribers, and for Vodafone Idea, it was a sixth straight month of losing customers. Mumbai's electricity undertaking, BEST, has received regulatory nod to extend its current 667 megawatt power purchase agreement with Tata Power for 5 more years. Electricity will be supplied from Tata Power's Trombay thermal and hydropower plants. In key bulk deals, Nalanda India Fund sells 1.56% stake in Triveni Turbines at 103 rupees per share. SBI Mutual Fund was the buyer. Lastly, Equitas Small Finance Bank has hiked its interest rates across various tenors with effect from January 1st. For deposits between 30 and 50 crores, the rate now stands at 7.5%. Well, that notwithstanding, it certainly seems to be the case that those banks or those stocks remain under a little bit of pressure. As we look at the pre-open rates settling down, BPCL, ONGC, HPCL amongst the top losers. We already took a call on those names. Wipro, the Times of India is reporting a possibility of a share buyback that could do reasonably okay. But the ones that are correcting the most are Dena Bank, Vijaya Bank, etc. Just a quick trading call out here, Sameet, Chouhan, if you can, a BOB, Dena Bank, Vijaya Bank.
To be honest, within this space, the only stock that we have been tracking is Bank of Baroda, and apart from this, to some extent, SBI and Indian Bank, the kind of patterns they have, it is quite encouraging as compared to other peers. But the Bank of Baroda, yesterday we saw, good amount of profit booking in this counter. So any pullback towards 115.16 would make it a good risk to reward ratio. And we expect the stock heading towards its 200-day moving average place around 126, 127. But as of now, I'm not sure whether Bank of Baroda will surpass this hurdle or not.
It's certainly not looking like. I mean, maybe a flash in the pan move on pre-open rates, but settled down just about 1%. So not a big bang move at all on BOB, just that the others have fallen. And this was widely anticipated that whether or not BOB moves ahead or no is a question mark, but the others will fall for sure. And that's exactly what's happened. Dena Bank down 17%, Vijaya Bank down 6%. For the uninitiated who don't know about the news, the swap ratio values these two much lower than the existing market prices. Actually, Vijaya Bank is now in and around the prices at which it's been valued. Dena Bank still a bit away. 13.13 is the price at which Dena Bank has been valued. So don't quite know if it will rest at these 17% lower levels. There might be more pain as well. However, less than a minute or just about a minute left for the markets to kickstart trade. So let's first get in the top trading calls from our expert, Shrikant, Chouhan, that one stock that you would trade today.
So I would like to trade in all technology companies, specifically TCS, which closed yesterday around 1920-25 levels. Here we should look for adding long positions with a stop loss below 1880, and on the high side we can expect 1970-1980.
Okay, Shrikant is going long on a TCS and the stock is opening slightly lower, so a better opportunity to buy. Sameet, Chavan, your top call?
I'll go with Sun TV. Certainly looks good on weekly chart. It appears that the stock has formed strong base and it is poised for a good move now. So Sun TV would be a preferred pick. 598 can be kept as a stop loss on a closing basis, and we expect a move towards 650.
Well, a pick given by Sameet earlier, but reiterating it as a top call for the day today. Gentlemen, just stay on. We'll take in final thoughts from you post-open. But here's how we are starting off in the session today. Maybe very flattish. I mean, let's not talk about the green or the red because this could change any point of time. The Nifty Bank already in the red, as is the Nifty, but very, very flat essentially in the session today. I think the world market futures are weighing in on the sentiment on the Asian bourses because they started off in the green, the SGX and the others, but have slipped into the red as well. Doubt that the mid caps and the small caps would be doing something dramatically different. Yeah, very, very flat for both of these indices as well. So flat for the small caps, flat for the mid caps as well. Let's get the heat map going. I would guess more red than green, but you never know. Now, actually, kind of even Stevens, to be honest. Not too many losers, not too many gainers. OMC is correct. Crude bounces back. OMCs tend to react. BPHP are down in the session today. iShare corrects yet another percent. Another 1.5% down for iShare Motors. Well, let's not talk about supports right now. Maybe we will talk about them with our experts, but it's under a lot of pain. 10% gone. Maybe there could be a dead cat bounce, but right now under a bit of pressure. ONGC too under a bit of pressure in the session today. Sameet was telling me that GRMs by and large look to be on a bit of a downtrend for some of these companies like Reliance as well. So do watch out for that. Marginally in the red. What's in the green? Hardly anything. Titan marginally higher. It's had a good trend the last few days and therefore continuing that. Bajaj Finserv marginally higher, Coal India marginally higher, but very few gainers. Now the red is slowly but surely enveloping the screen. Have we had under some pressure? Yes, about 1/3% now for the Nifty and the Sensex as well. So not the prettiest of starts for our markets. Quickly, just a couple of pockets that I want to highlight before I take in final thoughts from all our experts. Firstly, the PSU banks, they remain firmly in focus. BOB actually moves slightly higher, so 3% up for BOB. Dena Bank 19% off, Vijaya Bank 6% off. Vijaya is exactly in line with its swap price. I doubt that it will move too much from here. Dena Bank might have some more downsides. What about the other set of stocks, the TRAI data? And look at the cuts that have come into Vodafone Idea, down about 4%. RL is okay. Bharti Airtel too not reacted too much, but Vodafone Idea continues to remain under pressure. A lot of brokerage notes not too positive about Vodafone Idea as well. So difficult to take a call out here, but certainly under pressure. However, final comments from our technical experts and then a final comment from Parthiv Shah. But first to you, Sameet, we've started off about, 28 points lower on the Nifty. Is there a trade that you would be enticed to enter into, either the Nifty or the Nifty Bank?
No, I think for the day, if we have to take any trade, we'll have to keep a watch on important levels. On the higher side, 10,800 is the level to watch out for. If I have to take any long position, I would wait for this breakout to happen beyond today's high. And on the lower side, as I mentioned in my opening remarks also, yesterday's low, which is around 10,735, would be seen as a key support level. So any, if I have to take any short position, I would wait for a breakdown to happen beyond this important support.
Okay, so watch those levels. Sameet is not entering into a trade immediately. Shrikant, you are more sanguine about entering into a trade on the index. So I'm asking you, at these levels, would you initiate a fresh trade on either the Nifty or the Nifty Bank?
See, Neeraj, the way Nifty has opened, it is like very close to its previous low of 10,735 in the morning. I think the market will spend some time between this range, and because we are very close to important support area, at the same time we are expecting market to remain in the range. I think till the market is not breaking 10,735, there is no point in taking any short bet. But certainly, yes, we can look for taking some long bets in technology companies, especially in mid-cap IT as well as in large-cap IT companies. And we should also focus on few sugar companies, because there we are seeing some volume expansion as well as price expansion. So Balrampur Chini, Dhampur Sugar looks good to trade for.
Okay, very interesting. 105 for a Balrampur Chini is a bit of a bounce. Dhampur up about 0.5% as well. I would reckon that these quarterly numbers also would be much better, and maybe that is showing in the price trends too. So that's the top call from Shrikant, Chouhan. Actually, Sameet, I didn't ask you about anything on the non-index but stock specific that pops up on your screen. Shrikant had a word to say about the sugar names. Anything that stands out for you?
See, Escorts is the one stock we have been quite bullish on. Since last couple of weeks, we saw good recovery from lower levels. Due to Monday's movement, this stock managed to surpass its recent hurdle of 700 on a closing basis. Yesterday we saw mild profit booking from higher level, but overall, if you look at the weekly chart, the stock is poised for a good move towards 770, 774, which would be a near-term target. So any minor dip in this particular counter would be a good buying opportunity, and 680, according to us, would act as a very strong support.
Okay, so sugar from Shrikant, and he of course gave his top trade as well, as did Sameet Chouhan gave his top trade in Sun TV. But Sameet also believes that Escorts could be a good stock to monitor. A dip in that stock could be bought into as well. Gentlemen, both of you, really appreciate your time. Thank you so much for joining in today and giving us your thoughts.
Thank you.
Well, those are two technical experts, two are fundamental expert, and final thoughts from him as well. Parthiv, I'm trying to look at the Nifty 50 names, a bunch of losers out there. iShares is down on the 1.5%, but we've discussed that already. Okay, what I haven't discussed with you is OMCs. It's becoming a pattern of sorts. Crude goes up, these stocks correct a bit, then the next day crude goes down, and these stocks gain up a little bit as well. Very difficult to take an investment call here, maybe a trading call. What would you be doing if you want to make an investment in the OMCs? Are these good levels, or are lower levels better levels to enter?
See, frankly speaking, Neeraj, you very rightly pointed out, it's at the best currently positional trading calls rather than even thinking about investment calls. Despite the fact we saw very positive news about them recovering that entire 1 rupee which they were asked to take a hit on, and despite the fact that the scenario in terms of their marketing margins are extremely good, probably one fear that the market has, and a bulk of the operational EBITDA comes in terms of the refining margins, and I think the refining margins are going to be extremely volatile. So one does not know how the inventory losses, if at all any, are going to pan out, and how operationally these numbers would look out. Yes, many of these companies are in capex mode, setting aside HPCL, which is going to get kind of company with ONGC, but I think BPCL and IOCL, I think they are fantastic value buys. But unfortunately, I think the way these companies report the numbers, and I think going into the elections, I would take a pass, and I think I would again review these companies once the election outcome is done, and then we understand what is going to be the policy, who's at the helm, and all of that. But yes, I think I would take an avoid, and at the best would be positional trading calls.
Okay, positional trading calls at best into these oil marketing companies. Something that I wanted to point out, I couldn't quite place the name in my head. Now I finally have it. So Parthiv, I'll ask you. Jet Airways may have been a delayed reaction, but that default resulted in a 2% cut day before. It's down another 4% today, 253 from the highs of 281. So the market is taking cognizance of this. I don't think this 4% is due to crude price uptick. I would guess it's in part also to the development that happened yesterday. What would you advise somebody about the aviation space and Jet Airways in particular?
See, I think unfortunately, Neeraj, we know for the fact that it's a company which is in a mess, and even I think with crude being low, one always attributes, I think, the aviation sector with only the crude. No doubt, it's a very important cost component, but Jet unfortunately has a huge problem in terms of its non-fuel cost component being extremely elevated. So it's not at all an efficient airline, and I think yes, all the talks about somebody buying a stake and Mr. Naresh Goyal let going his entire stake, I think has not happened. And I had even given a view last time when it was quoting about 300 on hopes of somebody buying the stake, that let that thing happen and let us understand who is the new buyer. Something like what happened in SpiceJet. I remember when it was like $15-18, and when we got to know who's going to be the new owner and what is his track record and how well he has this capability of turning around things, and see, fantastic value was created. So I think certainly I think Jet is a avoid, and even if somebody is holding it at this juncture, my suggestion would be to exit this counter and have a say in Interglobe Aviation. I think this is a company which has done well from its lows, and I find lot comfort now that oil has corrected, the aviation turbine fuel has corrected by 14%, currencies being extremely strongly, and now that these guys are increasing the pricing, so I feel that I think it's best to go with the market leader, which is Interglobe Aviation in this sector.
Okay, and that seems to be a consensus view as well. Nobody quite wants to buy the distress in Jet Airways currently, fundamentally at least. Parthiv, good having you. Thanks much for joining in today and giving us your perspective. Really appreciate your time. Well, the market's not correcting too much, but about 1/3% lower. Keep in mind, though, when the US market, European markets open today, and they take into account the pressure that Apple is putting on NASDAQ, it might be a different story altogether. Would world markets, though, determine what Indian markets do in the calendar year thus far? A very important voice to talk about 2019. Mahesh Patil, Co-CIO at Aditya, Birla, Sun Life, AMC, joins us right now on the show. Mahesh, so good having you. Thanks much for joining in.
Good morning.
Happy New Year.
Happy New Year to all of you.
Would it be a Happy New Year? And would global markets be a bigger determinant, Mahesh?
Yes, I think global growth and the concerns are kind of cropping up. So this year, compared to last year, at the beginning of the year, we were looking at global growth, synchronous recovery, which kind of gave away during the end of the last calendar year. And there has been some kind of a downgrade to global earnings growth, GDP growth, as well as earnings growth a bit for this calendar year. So I think globally, especially in developed markets, looks to be a bit volatile or slightly negative. But I think if you look at the backdrop, emerging markets outlook there looks to be slightly better, right? The dollar strength, which drove the outflow from emerging markets last year, is kind of looks like it's peaked out, dollar strength, right? And with US growth kind of slowing down a bit, with rate hikes not been as stronger as what we were expecting earlier, I think the huge outflow in emerging markets, what we saw last year, might not be there. And then emerging markets overall valuations and growth also outlook is looking slightly better than the US. So I think given that, I think while the global markets might still be a developed market, will still be a concern for 2019, I think relatively emerging markets will do better. And within that, India itself looks to be slightly better placed in terms of recovery, in terms of earnings growth trajectory, because while we had some kind of a setback in the last quarter, some slowdown in the consumer names and the consumer discretionary and the auto names. But by and large, I think overall recovery we are seeing coming back in 2019 across these sectors, especially from the banking sector, the corporate banks, okay, which could drive strong earnings growth in CY19. So I think given that backdrop, I think India should do relatively better amongst the global backdrop.
Okay. Keep in mind, though, for today's session, what the NASDAQ does and the kind of cuts that the Apple stock is showing already could have some bearing on what we do in the immediate future. That notwithstanding, Mahesh, and we'll come to that earnings conversation as well, because I would want your thoughts on there, because now we're at the cusp of Q3 as well. If the Fed pauses, or actually one gauge yesterday on the Bloomberg side indicates that there could be a cut as well in the Fed rates. A lot of market participants believe that. Right. But that would be seen by US participants as a slowdown in the economy, and if the earnings growth out there is not that strong, and the US markets were to correct a little bit,
right?
Would the mother market coming off and global growth concerns and thereby the other global markets coming down mean that India will relatively correct less? Or do you think money will find its way into India and therefore India could actually stand to gain in that scenario?
So I think initially, okay, whenever we've seen the global markets reacting, or US being the mother market, as you said, it has an impact on other markets, whether it's the other developed markets or the emerging markets and India. So I think we would not escape that. Probably we would fall less. But after that, I think once the dust settles down, I think the relatively money will move into markets where the growth is much better. And we saw that. I mean, last year, in the last 2 calendar years, developed market, US did fantastically well, right? Growth was much stronger compared to some of the other emerging markets. So I think that picture could change a bit. But I would agree that under the backdrop of slower US global growth, India's growth also would not be as strong as one would have expected. So there could be some kind of a moderation to growth. But again, mind you, we are coming in from a very low base. Both
for earnings.
For earnings side, right? So that I think should be stronger, but and we've got elections and other factors. So market might not really do too well in the initial first half, and depending on how the global markets, how the risk of it, if it is a kind of a slow growth in US, it's okay. If it's a soft landing, if US goes into recession, I think then we have a problem. But that's not a scenario which you're looking at right now. US growth is still fairly good. There is a moderation in growth is what one is expecting. So that might not be too bad, okay, from say the other markets, emerging markets, or India in particular. So yeah, I think the initial reaction definitely will be, and that's what we are seeing currently, the start of the beginning of the year, right? With US market, especially in the month of December, what we've seen. And US market has corrected quite a bit. It's down almost like 15%. Yeah, or so. So
it's looking wobbly for sure. Let's wait and watch what further gyrations happen here. Just a tactical question, Mahesh, before we get to earnings, and that is, do you anticipate that there could be a bit of a stimulus-led rally in India? Farm loan waivers, we're not advocating that, but that's a form of a stimulus that comes in, right? Add to that the GST cuts that have been announced, and if there are some direct transfers, etc., all of that happen, that's an indirect stimulus. It may have its problem on the fisc, but do you think that will result in some bit of an uptick in the markets? The market doesn't seem to be prepared for that as of now.
Yeah, so I think pre-election, expecting some kind of spending by the government to boost consumption, especially in the rural side. We've seen rural distress and looking at the poll results in the state elections, I think that's where the spending could be. And you could see that coming through in the next 3 to 6 months before the elections. And that could drive some kind of a consumption, especially low-ticket consumption items, can see some kind of traction. And that is something which can be slightly positive for the consumer names, especially rural focused names. And that could help the market in the initial first half, is what one could expect. Though I think there are fiscal challenges which is there, as you know. The revenues for the government, the GST revenues are not really tracking as. So how they manage the fiscal balance, because the finance minister has committed that he will stick to the fiscal deficit target. But yeah, I think some amount of spending definitely I think the government would want to do, and probably defer the expenditure actually, because budget is more of a cash kind of accounting, so they can always defer that and push it out into the next year. But I think some stimulus can help to slow down what we've seen in the consumer space, right? Consumer discretionary especially. I think that can pick up as we move forward into this at the beginning of this fiscal year.
Okay, interesting. Let's talk about the earnings picture that you spoke about as well. I think long anticipated that the corporate bank's recovery will happen in Q4. Do you think the stage is set? You would have had conversations with multiple people in this ecosystem.
Sure.
Do you think if not Q3, then Q4 will see that revival coming in?
So revival in earnings will take time. Okay, you would not see for corporate banks, because they will continue to make provisions, okay, for the past NPAs. But the slippages would definitely come down, and we have seen that happen from the last quarter, and that trend will continue. So what that means is that a lot of banks making provisions, okay, increasing their provision coverage ratio. So FY19 is where you could see a significant improvement in terms of profitability, where your provisioning, the total credit cost could come down. So I think that number, and looking at the low base, okay, for this year, I think that number will look fairly very, very strong for all the corporate banks. I mean, and also the PSU banks, because of the bond yields have come off sharply. Okay, there could be gains, which could actually help in this quarter. Actually, this quarter the gains would come in more from the bond yields, because bond yields have come off by almost like 80 basis points or so. So that gains could help to boost the profits in this quarter. But the real improvement in terms of credit costs should come in from FY20 onwards.
So how does the market, how does a large investor like you view this? Q3 MTM gains, Q4 lower slippages, earnings recovery Q1 FY19 or Q2 FY19 onwards. Are PSU banks set to make a comeback into large portfolios?
So PSU banks would still have their own challenges a bit, okay, in terms of how they're able to really come out of this. Farm loan waivers would also be something at the back of the mind, right? Because how will that impact? But the other corporate banks or some of the larger PSU banks is where I think, and which are better placed in terms of raising capital. Because as growth comes back, some of these banks won't need to raise capital, okay, to show their net worth, because the growth was pretty feeble on the corporate side, right? It was almost flattish. And we've seen that recovery coming through in this quarter and will continue into FY21 also. So I think banks with a stronger management, okay, we have seen management change, leadership change in a lot of the corporate banks, okay, on a stronger balance sheet. I think they should be able to do well in this cycle. Not necessarily all the PSU banks, because they would have their own set of challenges.
Okay, I'm glad we made that distinction.
Yeah.
Okay, Mahesh. So then the question that comes to mind is, what does somebody who gets in dollops of cash from the domestic investor every month do in terms of parking that money afresh? I'm just trying to think. Maybe some corporate-facing banks, but not on the PSU side, but they would already be present in your portfolios. IT is in a state of a flux right now, and with what's happening in the US, you don't quite know there. Pharma, again, I would want to know views there. Where are those large pockets where you would deploy money that comes in Jan, Feb, March, April, assuming that that money keeps on coming?
So the broader sectors or themes which we think will play out in the next 1 or 2 years. Consumer banks is banking and financial is one part. Even the private banks, I think, will continue to show a steady growth. So we don't see any challenges over there. Consumer staple, because of the kind of a stimulus, so-called stimulus, okay, which would be provided, especially pre-elections, I think they could see some decent numbers coming through. And broadly, consumption should be a steady kind of a growth for India, and it will continue for quite some time. But within that, we like the more discretionary consumption, consumer durables, for example, where we've seen some kind of a moderation in this last 2 quarters because of various issues what we've seen. And also because of the NBFC sector, we've seen some kind of a liquidity tightening over there. But that normalcy should come back in the next couple of quarters. And by and large, that's an area where we see that the potential for growth, longer term growth, is much better. Penetration levels are low. The impact of GST also for this sector hasn't been fully felt, because the unorganized to organized hasn't really happened, because government hasn't been really strict in terms of enforcing. I think post elections, we'll see stricter enforcement, okay, for GST, and that should help the transition much faster. So consumer durables, okay, looks again a good space. The valuations have corrected over there in a lot of the names, so they are more reasonable now, and longer term growth outlook looks fairly strong over there. Apart from that, even some pickup in the infrastructure side. We've seen good execution by companies because of the strong order book which has been there, mainly in the road side or even from the metro projects. So that execution should continue going forward. And some recovery on the capex side. Still early days, but I think as we move forward, I think you should see some recovery on the capex side. So selectively in the capital goods infra names are names which I think one can look at.
Okay, so you're comfortable putting fresh money into all of these pockets?
Yes.
Selectively, of course.
Yeah.
Okay, interesting. What are you doing with exporters, Mahesh?
So exporters, again, I think our view on rupee is that rupee should remain fairly stable now, because we are with
at 70.
Yeah, around 70 or so, because oil at around say $60 or so, we're pretty well balanced on the BOP side. We'll have a marginal surplus, so it should be able to manage the rupee volatility much better. And so, yeah, global growth would be slightly weaker than what we were expecting earlier. So I think one has to, yeah, I mean, global cyclicals probably might not do well going forward. But in areas where, like for example, IT sector, we don't see much of a challenge there in terms of earnings side. Earnings growth, I mean, the rupee gains is something which we can't factor in going forward. But I think overall, where Indian companies have got a pretty good competitive advantage, I think they should be able to maintain their share or probably increase that. So while not very positive on the exporters because of global growth concerns and rupee stability, but I think overall company expectations for growth in a relatively environment, okay, where global growth is going to be moderate, even these stocks exporters, if they have showing a steady growth, okay, though moderation in growth, it might not be as strong as what we were expecting, and the valuations are okay and the cash flows are good for some of these names, I think they should hold on fairly well.
So as an investor, you're sanguine about IT?
Yeah, IT is still sanguine about it, yes. We're not negative about IT, though the returns there might not be that great because we don't see any re-rating for IT sector, what we saw last calendar year.
But you don't see a de-rating either?
We don't see a significant de-rating over there. Valuations are okay. Earnings growth should be, I mean, top line growth should be around 8 to 10% in that range. And I think that's around low teen returns is what one can expect in that sector.
Okay, interesting. Which brings me to my final question, and that's on, I mean, the space that's dominated headlines the last couple of days. The fine is mentioned in every portfolio. What do you do with autos? High frequency space, almost well owned, but the numbers have just started to falter. Yeah. I mean, is it a trend developing that the faltering numbers will continue, or would you believe they'll get arrested soon?
I would guess that in the auto sector, if you look at, I mean, what has happened in the last couple of last 2-3 months or so, the festive season wasn't that great. It was a combination of factors. Initially, the oil prices went up, so that could have hurt the sentiment over there. To some extent, the stress in the NBFC space, which were also big financiers over there, okay, that would have also got impacted over there. And the rural demand was not as strong as one we were expecting. All these factors, okay, are turning around, right? So we are seeing oil prices have corrected, so petrol prices have come down. So that should, at the margin, help in terms of when somebody is looking to buy. Okay, he'll also look at the running cost. The NBFCs, the liquidity crunch which was there is slowly kind of easing off, and you should see them coming back, say in the next 3 months by the beginning of the next fiscal year. And thirdly, on the interest rates also, okay, there were expectations that rates would go up, so that has also kind of moderated. And the big stimulus, okay, on the rural side should help rural demand to come back. So I would say that, yeah, I mean, this year looks to be slightly weak for the auto sector, but I think we should see some revival coming back next year. Because I don't see structurally auto sector kind of getting into a very, very low growth scenario, because especially say in four-wheelers, I think we should see demand again coming back closer to around 8 to 10% next year is what we are expecting. Commercial vehicles probably might they are at the peak of the cycle. Okay, we've seen last year was a good year, this year also being a good year. Because of kind of the new norms coming up, you might see demand kind of peak out in the next fiscal year or so. But beyond that, I think we could see a slowdown over there. Tractors also have seen 2 years of strong growth, so you could see some moderation over there. But I think four-wheelers and two-wheelers, I think, should be able to come back after a couple of months. And we've seen some inventory correction also happen, right? So the low numbers, what we are seeing is because a lot of inventory got pushed during the festive demand, and the demand was not that great. So we've seen that correction also getting factoring, and it will probably get corrected in the next couple of months.
Okay, so next couple of months that could get corrected, and by next year, I'm guessing Mahesh Patil means FY20 could actually be a good year for autos, even if FY19 has not been. Mahesh, so special having you at the start of the year. Really appreciate your time. Sure. Thank you so much for joining in, and a happy new year to you and your team.
Yeah, happy new year.
Thank you so much.
Thanks.
That's a really important market voice, Mahesh Patil, Co-CIO of Birla Sun Life, AMC, talking about his thoughts on the markets and the direction that they would take. It's time to slip into a break on the note that the markets are very flat. Since we are talking about autos, on the other side, we decode December auto sales numbers with two gentlemen, Jitendra, Adhia of Atul Auto. They actually posted a very strong set of numbers, and then Escorts joining in as well a bit later on.
anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is the show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
They're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with IndianOpen right here on Bloomberg Quint. December has been one of the toughest months for automakers across the value chain, be it trucks or bus makers or car makers. And across bases, companies which have got a very high sales numbers or volume numbers and companies which have got lower sales volume numbers as well. But there is one company, Atul Auto, that's managed to buck the trend, posting a 50% jump in the sales. So is it the e-rickshaws that have helped push up sales, or is it something else? Let's ask the company's Vice President of Finance, Jitendra Adhia. He joins us right now on the show. Mr. Adhia, good having you. Thanks much for joining in. Now, at the start of the year, you had spoken about a bunch of things which could help volumes, improving rural demand, the launch of the alternative fuel vehicles, electric vehicles in more states, new product launches. Something's clicking as a result of which the numbers are looking this good. What is it?
Absolutely right. There were a consistent effort to just improve upon the numbers, and yes, I'm happy to definitely see this volume going up. However, as of now, what is working for us is one, rural demand, which is coming up very well. The other thing is alternative fuel three-wheeler. The third thing which is working in favor of numbers is our export numbers.
Okay. Can you throw us more light on each of these? What is the stronger of the three legs on which these numbers are standing on?
Absolutely. Alternative fuel doing well for us. No two thought about it. If you ask me, export, we started seeing up in various countries. That has started giving us good volume. Repeat orders are also there. Obviously, rural demand is, becoming a little more strong for our kind of vehicle. As you know, earlier we were focusing on these market with our diesel range of products. So three of these verticals are, doing good for us.
Okay. You spoke about repeat orders from the export space. Now, this is something that you had a thought of, that continuing growth in exports at the start of the year. What markets are doing well? What products within these markets are doing well? And what's the scope? Because frankly, the base is low. So the volume growth percentage will look well. My question is, how would the overall volumes shape up to be from now, say, until the next 12 months?
See, I definitely agree with you and need some more time to deliver, the quantum numbers. I completely agree with it. But one good thing about the product is, in whatever countries, like in Africa or Latin American countries where these three-wheelers are being used, we have, after supplying the first lot, we have repeat orders. That is more exciting, that now product is well accepted by the end user, and we can bank upon it for next 12 months. Apart from 18 countries in which we have introduced our product, there are more countries which are using three-wheelers. So once the product is seeded well, we can definitely explore those potential as well.
Okay, but is there an internal run rate on this export number that you have, Mr. Adhia? I would presume that the currency moving down from 65 odd on an average to 70 odd on average also helps.
Definitely yes, but now overseas buyer is also smart. Definitely
Sure.
Everything is being factored very immediately. However, till now it is doing well for us. Number one. About volume, yes, we can say that another 2 quarters. In this 3 quarters, we have delivered consistent numbers, and going forward, we will be able to consolidate on these numbers and move forward to the next level.
Okay, I'm guessing you cagey about sharing some numbers right now, but I can understand why. Maybe in a few months from now, we'll be able to talk more about the export numbers too. Okay, so let's now focus on what do these numbers mean for the company based on what you did in December and November and October, without getting into specific numbers because you would be in a silent period. How has the quarter been, and would the growth on the revenue front as well and the margins too look attractive for the October, November, December quarter?
See, margins we can definitely talk later on. How about the performance in terms of? Sorry.
No, let's do that first. We'll talk about margins later. Let's talk about the performance and how would the volume and the sales number look like.
Yes. The good thing that number one, this revenue growth is substantial. That is point number one. In both the way, that is in terms of unit sales as well as in top line. The other good thing is that this growth has been contributed from all the directions. It is not being one state or one zone centric. So I expect that the plan of getting into more deeper penetration will be stepped up in next 2 or 3 quarters. We have a small network of around 210 dealers, which will be expanded further. And this is going to create a base for the organization to definitely create a good hope for the greenfield expansion, which is already on. We are going to double the capacity. So accordingly, on a back front, we need to widen our network. So this is definitely going to help logically for moving to the next level to the organization.
No, which is fine. Mr. Adhia, my question though is that when you say that the revenue growth will look robust, would it be as good as the volume growth or will it be slightly lower?
It would be almost at par with volume growth.
Okay, so the revenue growth and the volume growth would almost be at par. There were concerns that brokerages had at the start of the year on the margins. They believe they had pruned down their earnings estimates because they believed margins would be lower than what you clocked in FY18. How is the operational picture looking like?
See, till if you look at my first half, we have already, started improving upon that. And I expect that this improvement will keep continuing.
Safe to assume that then that the bottom line numbers would actually be better than the top line numbers as well?
As of now, we can talk up to, first half, and that is always, if you look at the comparative figures, that was definitely better than the last year's first half.
Okay. No, which I'm sure is, my question is the run rate of growth, and my final question on this conversation, Mr. Adhia, if the top line growth is in line with volume growth, and if you're actually seeing improvement in margins, it's safe to assume that the bottom line numbers will at least be in line with the top line growth and maybe even be better than the top line growth numbers. Is that a safe estimate?
Logically, if you go by arithmetic, so that is perfectly fine. However, I have certain protocol. I can definitely speak up to first half, my friend.
Okay, fair call. We'll probably talk about how good the numbers are looking once your quarterly numbers come out. But very happy to see you do so well, Mr. Adhia. Thank you so much for taking the time out. Pleasure. And have a great 2019.
Thank you so much, and wish you a happy new year and all the viewers.
Thank you. That's Atul Auto, one company that managed to buck the trend. The stock was up and active in trade when the numbers came out day before yesterday. I think went up about 15-16% if I'm not wrong, or maybe even 20%. So the 7-day chart of Atul Auto will show you that the stock price movement, led predominantly by that one move when the auto sales numbers were announced day before yesterday, is very active, 18% higher. You don't normally see auto stocks do that over the last 7 days. So good times for Atul Auto. The management believes they can last as well. Okay, just before we wrap up, what the markets are doing? Well, precious little. HP is down, but the bigger concern would be for Eicher Motor shareholders. It's down another 2% today. 20,750 is the tick on the stock. So aside of OMCs, Eicher is the one which has corrected. The other auto names, the likes of Maruti, actually bounced back. So Maruti is marginally in the green, not bad going. The Bajaj twins are marginally in the green, not bad going. Titan continues to rev up. So another 0.5% added. This is the second best performing stock over a 7-day basis. So that is not doing all that badly. And lastly, the banking names which have been in focus today. Dena is still down about 17%. Vijaya should be down about 5-6%, and Bank of Baroda should be flattish in the session, I presume. So those are the newsmakers in the session today. Lastly, Tata Power, which has had some positive news due, started off about 1.5% higher in trade, currently about 1% higher as well. It's a wrap on this leg of Indian Open. Thanks so much for watching. Up next is the FNO Show.